Have you ever wondered on how you can always catch 200 and plus pips as a beginner trader? All you have to do is to stick around, and I'm going to be taking you through step by step on how I do this and how you can as well do the same thing to actually level up your trading game. So firstly, this is what I love to do. So personally, I'm a swing trader, so I normally view the market from a bigger time frame, but that changes nothing. You could do the same with a smaller time frame. So let's dive into the video right now without any further delays. So what I love to do is to draw the trends, set my key levels in place just like any other trader could do. But what I do different is actually this. So first thing that I love to spot is that I try to understand the structure of the trend. Is it a bullish trend or a bearish trend? So if it's a bearish trend, then I should be looking for sell, and if it's a bullish trend, then I should be looking for a buy. But it all doesn't end there. There is a little more confluences you have to put into consideration before you actually pick up on a trade. So this is what I normally love to look at. So firstly, I will open when I open my charts, I start from a bigger time frame, sometimes from the weekly or monthly time frame, just to get a really broad picture of the market and to understand what it's doing. So right now we're in a monthly time frame, but you don't really have to worry if you're a day trader. You could definitely do this even on the H4. But I love to do it this way because obviously I'm a swing trader. So when we look at this, you could tell that in a very long time we have been bullish. See that? We have been bullish. So when we got here, we sort of had a reversal right here, but you get that we had a very huge rejection, and then around here the market has been a little choppy. So that's the monthly time frame. All it had to tell us, it's actually a bullish trend. So once I'm done with that, I head over to the daily time frame, as there is nothing much to see from the weekly time frame. So when I head to the daily time frame, I get to see that, hey, the market is a little bit consolidating. So it's not always good to trade a market that is consolidating. That is if you're trading from, like, let's say the M15 and it's consolidating, it's not so good. But if it's consolidating on the monthly time frame, you can still trade that because there's always a huge gap between those channels and you can always spot a very good buy or sell. So for example, look at this. I've been doing this a couple of times already on GBP/JPY and also GBP/USD, as we are about to see in the future. So in this trade, I caught over 300 pips. You could see it right about that, 305 pips. On this trade, I caught over 266 pips, and on this trade, I've caught over 283 pips with a risk to reward ratio of 3 to 5. So that's what I'm here to talk about today. How do I do that? So firstly, after I've drawn my key levels, and if you're a beginner and you have no idea on how to draw key levels, it's pretty simple. So this is what you often have to look at. So when drawing a key level, you look at the area where the market often has a rejection. So for example, look at this key level. The reason why I put this key level is that the market came here in the past. I love to use the small balls, though quite often they don't work out as I want them to. So look at that. The market had a rejection here. Another, oh my goodness, come on. Excuse me about that. So it had another rejection here. And another rejection here. So we have had, in most cases, if you have 3 rejections, then that's a valid then that's a valid key level. Without 3 rejections, it's not really a valid key level. And well, you see, they don't always have to be rejections. It can be, let me call it touches. If the market touches the key level 3 times, then it's valid. But if it touches for only like maybe once or twice, then that's not a strong key level, man. So we shall have to probably look for a better one. So putting that aside, what now do I look at next? So after finding out that, hey, I've spotted a really good valid key level, so I really look forward to the market to obviously react to that key level in a couple of ways. It could reject, it could break through. I mean, we are not biased about what's about to happen. We just wait to see how the market plays out, and we go by that, because if you try to go against the market, you lose. You will always lose. So you just have to follow what the market does, and that's it. That's how you actually end up being profitable as a trader. Pretty simple. So I want you to look at this. The 2 confluences I look for before I enter trade. One, I should have a break and retest, and after the break and retest, the other thing I look at is an engulfing candlestick. So if I don't get the engulfing candlestick, however beautiful the trade looks like, I never enter that trade, because every time I go against my trading rules and I lose, I have no one to blame other than myself. But then if I lose while following my trading rules, I'm actually happy, because I lost but while following my trading rules than losing while not following my trading rules. And what's funny is that most of the times I follow my trading rules, I literally never get to lose. For example, 3 weeks back I've always had I've only had one loss and like 5 trades. That's crazy. And even that one loss I had is I didn't follow my trading rules. So it's really important to have an edge in trading. And if you don't have one, well, I'm gonna help you find one. Probably you could just copy mine and try to find a way of how you could blend it into your strategy, just if it works out for you. But quite often it does work out, because also the strategies in mine I copied from somewhere else, from someone else, and it often does work out, and it worked out for me. There's nothing new we're inventing in trading. It's the same things that have worked in the past that are still working. So this could work for you as well. So less of the yapping and more of the action. So right here I did have a break and retest, then enter the trade. So but let's try to go a little bit into details. So from the daily time frame, I've gone to the H4. So okay, so I want you to look at this. I'm gonna zoom in just a little bit so that we can clearly see what I'm talking of in this scenario. So look at this. So when we broke through the key level, as you can see, we broke through this key level, we had a pullback. So when we had a pullback, obviously we had a rejection and we later insanely bought. You understand? But I want you to kind of look at this. So I kind of rushed to enter this trade again. You could learn from my personal mistakes. I rushed to enter this trade. Look at this. When we broke through the key level, I immediately entered that trade. But when I did enter the trade, it had to come back for a retest. I mean, it always does. So when it comes back down for the retest, I am dipped a little into losses. Look at this. At some point, I was halfway almost to my stop loss, just because I had entered that trade so early. And look, my stop loss is pretty wide. It's 138 pips, but an average person's stop loss is always about 50 pips, right? So if your stop loss was 50 pips, that means you could have been put out of the trade. And then look at this. Just after being put out, the thing goes literally where you predicted it to go. That's really painful. So you always have to be patient. You wait for that pullback, and then you can always enter the trade with minimal risk. And again, let's look at this trade I took again. So look at this. So this time around, I was patient. I waited for the pullback. So we had that break of the key level, we had a pullback, and then we're seeing this sort of once again. But there's something I want you to look at here. So even after having the pullback, I immediately didn't enter this trade. I waited for an engulfing candlestick. So I want you to look at this candlestick right here. Well, someone could say it's not a perfect one, but at one point it was a perfect one, only that it had to come back. So when I had the engulfing candlestick, now I had a really good confirmation that now the trade the trade is ready to be executed. But just to look at something, I don't know if you guys have already seen it, but there's something special about this trade. Look at this. In all these trades that I took, the 3 trades that were all profitable, by the way, I was following that trend. So look at this. We were already in an uptrend when I took this trade. Sorry about that. So we were already in an uptrend. Look at that. By the time I took this trade, we were already in an uptrend. So at this point, I just looked at this as a retest, while I'm pretty sure that we shall go up. You understand? So that was a very good, confluence as well, knowing that we are already in an uptrend. So chances are high the market will continue to go up. And look at this. When the market changed course and we were now in a downtrend, in a downward trend, I was pretty sure that we shall still keep going down because I was following the trend. So that's why this trade here, it was perfectly executed to perfection, because I want you to look at this. My take profit was just here, but if I'd held longer, I could have caught over 450 pips in just 2 days, because I'm a swing trader, so I held this trade for about just 2 days. So that's the thing of trading with a trend rather than against a trend. You have unlimited possibilities. Now this was a counter trend. I was trading against that trend, but remember, we had drawn our key level. So in the past, the market always rejected on the key level. You see here, the market rejected. We came here, the market rejected. So I was pretty sure that here it will reject again. So that's why I entered this trade again with my confirmations there. Break and retest, obviously on a daily time frame, that's why we can't see it. I often look for the break and retest from the lower time frame. So if you're a day trader, you quite often trade from the maybe H4. So you may not always get a break and retest from the time frame you're trading with. Let's say that H4 as a day trader, but you could get it from a lower time frame. Let's say that H1 or the H2 or the H3. So it's still a valid one, but when you get it even on the daily, oh my god, then that's another plus. But that should never stop you from taking that trade, simply because it's not yet, the retest is not yet visible on the daily time frame. So same thing here, we had a break and retest. Sometimes it's not very perfect, by the way. Okay, so I'll zoom in a little. So when I got the H1, you see it right here, a break and retest, and then we have this engulfing candlestick here. You get it, this engulfing candlestick here. So after having the engulfing candlestick, actually the perfect entry was just right about here, and then a simple retest of our entry, and boom, to the take profit. So that's GBP/JPY, and let me also show you a really beautiful trade I took on GBP/USD just a couple of weeks ago. So from the daily time frame, we had a very good break and retest. So always we wait for that break and retest, and as I told you, don't you may not always have it on the daily time frame, because since it's a daily time frame, action takes a little bit longer to happen on the daily time frame. On the daily time frame, one candlestick is formed every single day. On the H4, a candlestick is formed after every 4 hours. So basically, if you're a beginner and you don't really know this, you could go to those beginner traders that talk so much about this in details, more than I could in just this short video. But just to give you a summarized version of it, is that, for example, on the daily time frame, when we look at this one candlestick, let's take an example of this candlestick. This candlestick represents what happened in that day. So when I shift to probably the H4, you probably get to see a lot of candlesticks in that box I just drew. You see, we now have a couple of candlesticks in that very box, as you get to see. The other one candlestick. So this is all that happened in a single day. So the other one really huge ginormous daily candlestick just represents what happened, summarizes in other words what happened in the day, while you can go down to the smaller time frames to see what really took place, just in case you need those details. Alright, so look at this. So we had a break and retest as always. We had the perfect break and retest. So after that, we waited for an engulfing candlestick. Again, we may not always see that on a daily time frame, so I always look for my entries from the lower time frame, like the H4, and sometimes I even go up to the H1. So look at this. We had a break and retest. Now we're on the H1. We just left the daily time frame. We had a very good break. Obviously, for a day trader or a scalper, this is a good trade as well. This is a good trade as well. But as a swing trader, I often don't really, I look at the long-term trades. So if I try to, let's see how many pips were here. Let's say they entered from, this is a good trade as well if you're a day trader. So you see these are 163, over 150 pips a day trader could have caught. But as a swing trader, I'm always patient waiting for my setup to happen. So we had a break, came back for a simple retest right about here, and we had a fake. The market kind of faked out, so a beginner trader could easily fall for it. That's why now this is the number one reason why I say we wait for that engulfing candlestick, because it gives us a confirmation. Look at this. Market broke through the key level and it actually went to the upside, literally even having a break of structure here. Look at this. You see, going to the upward direction. So for any beginner trader, they could easily fall for this, and sometimes this could be referred to as a sweep of liquidity or whatever you love to call it. But all you have to do, well, all that I had to do was just to be patient, wait for that engulfing candlestick. So as you see, I was about to enter this trade because we almost had an engulfing candlestick here, but it didn't form. We ended up with this weird candlestick. Could I call it the hammer? And a doji here and here, and then finally it broke through again, made a minor retest, then boom, we had that engulfing candlestick. Look at it. So the moment I saw that, I was like, well, this trade is now ready to be executed. Enter that trade and held for just about, let's see for how long I held for just about 3 days, and I was able to close with over 300 pips, which is pretty amazing, guys. So putting that all aside, let me take you somewhere different. So this is my Telegram channel. I share all my trades here with my students, so you could always come. You can just click the link below in the description to join my Telegram channel, because I share signals for every single trade I take, and for absolutely free. I have no VIP. I believe growth is as a community, so I give out signals to everyone, no VIP, because I want everyone to eat with me. For example, the trade on GBPJPY, I gave my people a signal right here, buy, told them where the stop loss on the TP way. So we entered a trade with them, Later, I kept on documenting it just with them until we got to our take profit right here. So if you want to be part of this community, just click below the link in the description and we shall meet in another video, guys. Thanks so much for watching and turning in. I love you so much.